Good morning and welcome to today's Issuer Direct Corporation webcast as part of the Planet MicroCap Showcase. It is now my pleasure to turn the floor over to your host, Brian Balbirnie, CEO of Issuer Direct Corporation.
Thank you, Kelly. Good morning and good afternoon, depending on where you're listening to us today. Before I get started, a special thanks to the SNN family for allowing Issuer Direct to both not only present at today's event, but also be a partner in providing technology solutions to allow these events to go off wonderfully, both for the investment community, folks at SNN, and us, the issuers. I'm sure a lot of you know who we are. Before we get into a bigger part of the presentation today, I'll just remind folks that what we're going to talk about today has some forward-looking statement obligations, and all of the numbers that we'll provide to you today will be based on 12/31 and Q4 data. We anticipate filing our Q1 results here coming up on the 6th of May. So in typical fashion, folks know that we tend to have our call about 4:30 Eastern time. So we'll let that hold true, and we'll look forward to having some follow-up with you after that call and after that happens. So if we think about who Issuer Direct is, folks that might not know us, for those that are new, and for folks that do know us, I'll try to hit the high points, not to be too repetitive for you. Founded in 2006 as a disclosure management company, Issuer Direct helps public companies and private companies tell their story. Essentially what that means is we are the conduit to the markets. Our communications platform helps thousands of customers through the process of telling their story to millions of people globally. And we'll talk about what globally means in a few minutes. But we're close to almost 100 employees now, 96 actually is the number. Plan to have hires over the next couple of quarters to get us to that 100 number. Inside ownership is high, right? And this is what you tend to want to look at in a microcap stock and a story. Heavily weighted towards myself and other management and board members at 27%. Total issued and outstanding. And that number is about 3.7 million total shares issued now. There's no other classes of stock but common shares. There's no options. There's no warrants. There's employee stock options and a small amount that is really less than 1% of the issued outstanding, if anything, maybe 0.5%, that earns over the next several years. Something else unique about us, too, is we continue to accumulate cash. We had record quarters in revenue and customers and earnings over the past year, and we see that that's something that should be able to continue. So this cash that we accumulate is total about $20 million now in our balance sheet, and again, no stock held as assets on our balance sheet. We don't take securities from our customers to do the work that we do. We have engagements and contracts and subscriptions, just like anybody else you'd expect that folks are paying for those services. What we sell today is two pillars of strength. Our legacy business, we'll talk about today, is our compliance business. Typically in past reports, we've looked at those as services business, like print and fulfillment, AGM, SEC filings and SEDAR filings in Canada, as well as ownership reporting and stock transfer services. And we view that business as a sidecar business to us. It is single-digit growth to a flat business, where we see all of our growth and our potential to grow this business is in our communications side, and that's led by our AccessWire News product, which most of you know is an outlet for most of the investor conferences in the market to use to promote these events, to talk about companies and their presentation dates and times. And thousands of customers use that product and continue to grow at 25 to 35% in customer count numbers and revenues over the last couple of quarters. But not to be undone by our wonderful AccessWire product is our events, our virtual business. And that includes AGM work virtually. That includes events like this today, earnings calls, non-deal roadshows, special events, and anything around the events business is where we really see an opportunity for us to grow that business strongly. We also tend to want to look at new products, and those new products tend to look at something that we'll talk about that is going to be very focused on our communications side of the business. And as we talked about earlier, what are the attributes that make up a good microcap story, right? Insider ownership, positive cash flows, growing revenues, good product mix, good opportunity in the market. But there's also other things that you want to look at as well. And folks tend to think of us as a microcap company. And although we are, our business goes well beyond that. And you think about the largest companies in the world that use our services like Kellogg's and Aflac and D.H. Horton, even right to the IRS. So we're capable of enterprise-grade product. Most of our enterprise-grade product is what we're doing today is our Webcast solution, as well as backed up with all the rest of our communication services that we provide. That took us to about 4.7, almost 4.8 million in revenue in Q4 last year. That was over 3,000 customers, heavily weighted towards this private growth area that we've talked about in the past. Our public companies around 1,500, and our private customers in around 1,800 customers. And you will see that number quickly jump to 2,000 and well beyond here in the next couple of quarters. And we have our eyes set on, as I've said in the past earnings calls and other presentations, that we believe our customer account numbers in the next 18 to 24 months can get close to 5,000 customers. And so if you think about ARPU spends on subscription business, if you think about market share that we've talked about in news, getting to 3 to 5% of market share, we're truly excited about what our communications business brings to us, not only in scale, both geographic, meaning our expansion and distribution globally, but the numbers of customers and new products that we're going to be able to add to that product lineup, which is very important to us. And so if you think about what it is that we'll sell tomorrow, AccessWire has a wonderful ability to garner new customers at a reduced sales cycle rate. And what I mean by that is typically our compliance business has been a long pipeline building exercise of 4 to 12 months to see a customer actually turn into revenue. Our communications business is down to days. Customers looking to tell their story, both public and private, are turning towards companies like AccessWire and primarily us as the fastest growing newswire in the market because of our flat fee pricing, because of our ease of use and technology, because of our integration into other suites and products that they use. So if we think about a public company, like everybody presenting today, the efficiency gain from using an ecosystem or a platform like Issuer Direct is to really centralize all of those services into one process. And what that process is what I talked about at the beginning of at the top of the presentation, is that we're going to produce our earnings to the markets on the 6th, right? Next month at 4:30. You know, today, our CFO, myself, and the rest of our team through audit and legal have completed our 10Q, have done our earnings release, and are using the Issuer Direct platform to do it, as you'd expect. And so it's one event, and that event is based on that earnings date. It's the earnings advisory that goes out the week before. It is the earnings press release that goes out 30 minutes before the call. It's the webcast that gets set up. It's the 10Q and the 8K that gets set up and wrapped around that entire event. And typically customers, the public company markets, whether large or small, whether they insource or outsource, tend to use multiple vendors to do this. And so the value prop for us is not only the hard dollar savings, meaning if your current product lineup customer vendor choice costs you $20,000 a year to do all of these things, I may be able to come to the table for $15,000 to $16,000 a year for everything. But that's not the real savings. The real savings is the time value of money, is how much time am I spending with these 5 or 6 different vendors, and how much less time can I spend using an Issuer Direct product subscription to do all these things. And that's very important in the small micro nano cap space, right? The folks that are $2 billion and down, they don't have the internal infrastructure to be able to handle all these vendors and manage all the solutions and track changes and all the things that happen with the life cycle of a document. So that's where we do well. And it doesn't mean that we're not growing beyond. I think over the last 6 months, we've actually likely sold more customers, new customers that is, in out of the small cap marketplace, meaning 2 billion and greater, or greater than that, right? So mid caps and large caps that we're starting to really find sweet spots of acceleration for us, which is very encouraging for branding, product differentiation in the market, and what we can do compared to somebody else. So when we look ahead, we have to think about products that are really geared towards, I buy press releases and earnings events, or press releases and virtual events, or press releases and IR systems from you, but I need more. And that's very important for us to continue to invest and innovate against what that more means, so that we keep the customer sticky, we increase our ARPU spends on customers, and we keep our customers for longer periods of time, right? So the lifetime value is very important to us. And when we think about that, these are products like Newsroom. These are media database, monitoring, and analytics products. And for those of you that ever bought these solutions before, What it really does is it gives a public or private customer, and we'll forget about who they are, just say a customer, the ability to draft and tell their story in our platform, target the right investors, target the right media professionals, and then attach social media and analyze the heck out of everything they do in between. And as it happens, it automatically goes to their newsroom and is delivered to email, to text alerts, however you want it consumed to the audiences that you have or the audiences that you targeted. And that life cycle for us is extremely important. So as we think through the buy and the build scenarios, we're going to heavily focus this year on looking at that. I've said in past calls, and I can update folks today, we're about a third of the way through the build on our newsroom product. And what that means is that we've gone through, our product managers have gone through customer validation, customer needs, trying to establish what is most important to our customer if they were to purchase a newsroom product from us and what that means to us. So the average revenue will mean an incremental approximately $3,000 a year added on to current subscriptions and or current private company spends today. That product, like I said, is a third of the way through development, and we expect that in Q3 we'll be able to launch that product to what we'll refer to as the low-hanging fruit or the MVP clients for us, that we'll start to see revenue, we'll start to get client testimonials, and then at the same time, we're turning our attention to database, monitoring, and analytics as other solutions that we believe, one, acquisition is likely, two, partnering may be likely, and or the ability to leverage API and move that product into our ecosystem. For folks that have used AccessWire today, for folks that have used Blueprint and our compliance business or stock transfer businesses, they typically have two separate platforms. So one of the initiatives that we have this year is to consolidate everything down to one platform. And it's really a commitment to further our strategy. What we've been saying for years, it's one platform, one check, one contact. We truly need to get that to one platform holistically to get the thousands of customers we have leveraging our products into one ecosystem. And by doing that, we should have some consolidation in brand, meaning you'll likely see over the next 12 to 18 months that the brands will begin to change and focus in on one name for our entire product platform. We're super excited about wanting to talk about that more, but we'll leave that for another day is probably the best thing to do. Revenues in Q4 were up 20%. The prior quarter, I think it was up 21%. Communications business is where the growth is. It was up 31% over the prior year from a quarterly perspective, not an annual perspective of Q4. Service revenue was in line and or flat from the prior periods as well. But what's really important about revenue numbers and client growth, and we talk about this a lot, is our subscription numbers, right? We said that we had a goal of getting to about 300 plus subscriptions last year. We ended up at 341. ACV was about $7,800 a piece per customer on average, which I think totals on a total basis $2.6 million, almost $2.7 million in subscription products. And a lot of folks will say, well, wait a minute, the revenue is not that. And if you're majority subscriptions, what's going on there? I will tell you that there are hundreds of customers that purchase a single product subscription from us. And it has been our goal over the last couple of years to move these customers into a broader subscription. So in the coming quarters, we're going to talk about customer counts based on single product subscriptions compared to full suite subscriptions. So just keep that in the back of your mind that the 341 number that we disclosed at the end of last year that will likely continue to be a tracking KPI for us going forward is what we refer to as Platform ID. It is our full ecosystem product that we're selling to the public company marketplace. We kind of think about strategy, where does that number go to? Well, as everybody knows, we don't provide quarterly guidance on revenues and customer accounts, but I would tell you that we feel strong enough in our pipeline that we'll see that number climb to 500 or beyond this year, meaning fiscal 2021, in a basis for what we understand Platform ID to be. Doesn't account for all the hundreds of single subscriptions. That obviously is on top of that number, but it will give you an idea of what we're expecting, what we're seeing in the pipeline, and where we believe our business is headed. I think you just assume for today that the ARPU numbers are the same. As we add in these new products, we'll begin to see them climb, but it likely is a little premature to go beyond that in any stretch of the imagination. So maybe lastly, I'll follow up with just a couple things of where we're headed today. What is IssuerDirect doing today? Some of the things I've already talked about. Where are we headed in the future, and where do we see our expectations sitting? And so for today, as everybody knows, we've got this scalable communications business that is led by AccessWire. Again, a product platform that is 27 to 30+% year-over-year growth. And if you run the numbers out, I've said to folks before, is we're going to need to continue to do that and more to reach our goals of getting to the numbers that we want at 3 to 5% market share over the period that we mentioned. So we believe we're on track for that. We're starting to see some momentum be able to happen there, both in our digital e-commerce business, as well as just a reduced life cycle in our pipeline of how quickly it takes to turn some of these customers into customers. Revenue contributing customers, that is. Product platform is still reoccurring, very sticky. High gross margins on that product platform. Our subscription business is about 80+% gross margin. When you fold in some of the services business, you end up with a consolidated, average margin about 70% for the business, which is still good given our peers and what we're doing in the market. And we believe over the next couple of quarters, we can continue to see that number move even higher. The leverage that we get on the business from an EBITDA perspective, we've been in the teens in past quarters of EBITDA. We've sent a message to people that we can get back into the 20s as we were before. We believe we're on track for that this year, and we believe that we'll continue to see the growth in our business, that as we see costs almost fixed, that a lot of this growth now just starts to fall to the bottom line. And that will be absent, of course, of the investments that we make in these new products and or potential other M&A activities that we do and one-time charges for those M&A opportunities as well. The future, right? We talked about sidecar compliance business, love it, generates a good amount of income, it's a good amount of free cash flow, but it's not the focus of the business. It's an and one in our estimation. We go in selling communications and trying to get customers convinced to use our platform to tell their story to the markets, and we can provide the disclosure business, and we can provide the stock transfer business, and that seems to work very well for us. When you survey our customers, which you do quite often, the majority of the individuals, meaning not the decision maker, if the CFO made the decision, we go after the attorney, the controller, or the CEO and ask them how they identify who we are. 92% of these people say communications, right? They provide my IR systems, my earnings events, and my press releases. Or if they're a private company and they're reasonable sized, they're the ones that help me tell my story to the market. And that really is the focus. So you move kind of the ship towards what the customer wants. When you see that opportunity, both public and private, the TAM for us is huge. Burton Taylor just released a new report on the communications space in general, which covers news, IR platforms, social media monitoring, media databases, analytics, and everything that we're providing in our communication space. And it increased 4% over the prior year in growth, right? So folks have always said, well, if the market is so huge, what's the growth? Typically, the communication space has only grown at single digit, meaning it's grown at 2 to 4%, but it's close to 10% last year in growth. Coming out of a pandemic year is remarkable. So when we look at this, we say to ourselves, not only is the TAM significant, but it's growing at a higher rate than what we anticipated, and we are taking market share from the majority of the folks out there in the market. So we've got a kind of a double whammy helping us there, which is very exciting for us. And then 3X the customer counts, which we've talked about in the past, right? And want to get that number to 5,000 or more by the end of this year and continue forward from there, which will help drive us to getting to 3 to 5% of the market. I tried to be brief. I try to keep these slides short for folks to talk about kind of where we're headed and what we're doing. But let's just focus on the tactical perspective just for a second and some closing thoughts. Is that we're going to continue the momentum to achieve this double-digit growth in our communications business. So when I say double-digit, I really want folks to be conditioned to think about 20, 25, 30, 35, not 12% double-digit growth, right? Although that's good, it's not where we're focused. And anything less than 25 for me is a failure. And we work hard to be able to put ourselves in a position to see this growth. Super excited about that and what our customers are doing with us. And we look forward to seeing that happen for us this year and beyond. But we want to stay focused on these new opportunities like Newsroom and this complementary products business that we talked about to Newswire. Although current business growth and focus is applied there strategically, we have to be able to put ourselves in a position to see this growth out 3 to 5 years and beyond, and these new products will help us do that. So this is an important year to really establish ourselves in some of those new product categories. And then continue to invest and leverage this digital sales and marketing strategy that's working for us. It is where we're seeing a lot of these single customers come to us with, minutes or days pipeline to be able to turn them into paying customers. And we want to continue to learn, leverage, and invest in that more. We've got some current hires focused around that, trying to figure out ways to double that business and even beyond. And I mentioned it earlier, right? End the year at 500+% platform subscriptions, and then just manage that services business to a flat or single-digit declining business as we really just pour gas all over the communications side. And I think I'll leave the last bullet there is talking about our capital allocation. Folks know how I feel about this. We're going to continue to fund and invest in our growth of our business at its core. We've got the capital to execute in an acquisition or two, and we continue to find opportunities there, and we're committed to being able to do that. And I think I've talked enough about that in the past. So I know we have some questions. We have about 5 minutes left. I think the last thought really is just to leave behind is that our vision is to be that trusted platform that brings both the customers and the market together. And that's a very broad statement, and it should be very broad as we continue to innovate our business even more than we have in the past couple of years. That statement will begin to hold true in the next couple of years. I'll get through a couple of the questions. I may not have time for all of them, and if I don't, I'll come back to you individually and see if we can't answer those for you. What would be the estimate of your Newswire market share is one of the questions that just came in today. And we talked about this in the past year that we were about 1 to 1.5% market share. We're still there, maybe slightly, a 0.01 or 0.02 increase from where we were a couple of quarters ago. We continue to build on that. So we're within our customer numbers and within our revenue estimate numbers to see a path to getting to this 3 to 5% that we talked about. So I hope that answers the question. And we'll talk about that in the earnings call a little bit more here in the next couple of weeks. The next question is the competitive environment for Newswire rationale based on features or based solely upon pricing? And that's probably one of the most important questions that we get asked as a follow-up to our earnings calls by our shareholders and analysts and others that have been following our story or been invested in our story for years. When we started AccessWire, there's absolutely no question that everybody knew that we were the flat fee unlimited Newswire, best prices in town. If you needed it, we had it. That was our model. That's how we got the first 1,000 customers. That's how we built the brand to find that low-hanging fruit, to build the infrastructure necessary to be able to go out and compete. And we sold a lot of our subscription deals at unlimited Newswire. So public companies would buy our product platform, unlimited news, 4 earnings calls a year, their IR website, and maybe some media monitoring or media targeting or investor targeting, and therefore a flat fixed fee. Let's call it $7,800. I would tell you that over the past 12 months, the majority of those contracts and all new platform ID subscriptions are no longer unlimited. The average price per release on a pay-as-you-go service has increased over the last couple of years from about $200 to about almost $400 today. So if you look at our website, we've got our prices fully transparently available, which most newswires don't. Customers can sign up directly with us, whether they're public or private, and begin doing news in a matter of minutes. Of course, same editorial process as everybody else, same distribution as everybody else. But now that we've leveled the playing field in distribution, to back to the point of the question, is we're able to walk prices up a little bit. In past years, of course, we were selling a product that was inferior to somebody else's, like a PR Newswire or Business Wire, so price was the motive for folks. Today, that distribution is virtually equal now, so the prices could begin to walk up. And the most of our new client wins that I talked about a few minutes ago, about beyond $2 billion, they're coming as a result of because Newswire, not because of anything else. So we're starting to see this momentum in traffic. And as everybody knows, the minute you start knocking up a couple 20 or 50 or $100 billion companies, the rest of it starts to fly even faster for us. So very excited about that. I think I've got time for one more real quick. I think you mentioned on your Q4 call your plans for new products. Can you maybe please touch on those for us and what you expect to see from those new products? I think I actually covered that question, but that's okay. Newsroom will be the first one that we release here in Q3. Media monitoring, media database analytics, and a CRM component will be the additional product that we'll be adding on to that. We feel good about those products to happen this year to contribute to revenue in the back half of the year. And we're super excited about that. I want to be respectful of time. I was told 25 minutes, and I think I'm right there. I want to thank you for everybody taking the time. I know folks on the West Coast getting up early to do this is much appreciated. Hope you have a good rest of the conference. You get to visit with some great companies and fill your one-on-one meeting schedule tomorrow. Thank you again to the SNN crew for allowing us to have this opportunity. And Kelly, I'll turn it back to you.
Certainly. This does conclude today's webcast. Thank you for your participation and have a wonderful day.